Hi, and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
A very good morning to everybody. Welcome to another Friday chart clinic dated 15th of March 2013. I have with me here today, as usual, our special commentator of the US market as well as gold market, Mr. Bill Wermine here. So our agenda today, thanks a lot, Henry. We're going to be looking at those stocks, FGV. Let me just put that in, FGV and multi-purpose holding. Okay, right. So I'll just get, these are the agenda for today. For start, there will be a special talk that I'll be doing tomorrow at my office. For those of you who is living in Kuala Lumpur and happen to be around town, this is something that you don't want to miss. And we only make this specially for those that is actually presenting, because there's a lot of information in there. And this is the one I just want to show you. And what you'll be getting tomorrow, right? Tomorrow presentation will be at the Jupiter office in Kuala Lumpur, Jalan Raja Cholan. There are still a couple of seats left. It's free for all our premium members. Basically, it's a research that my intern and myself were really working on it for almost 2 months, looking back at the historical data that we are using, right? That we actually source it, looking at. So what we want to do is perhaps want to study some DNA, what makes an above average return for particular stocks. Okay, so this is the one that we'll be talking, and we look almost at the 940 stocks here that actually made only 25%, you could see, make above average return. So what are the quality and what are things you want to be looking at? So this is a flavor for the so-called, will you record? No, I won't be recording tomorrow's session. This is a session by the Jupiter. As I said, this is a special occasion in there. Do come around. There's a lot of information I'll be getting, because I'll be doing a lot of hands-on too with the audience. So it's going to be quite difficult. This is a special session for the so-called online presenter there. Okay, so I hope you all seen. If you do want to register, what you do, send an email to servicecenter@jssb.com.my. Okay, jssb.com. Now, outstation not able to attend. Yes, that's right. Fortunately, it is. But never mind. When you do come to KL, let me know. All right. So this is a special presentation for those people who is actually in Klang Valley. Maybe I may make a trip for those people outstation one day. Okay. One more question coming up. Can you record some bit? No, I won't be able to do the recording, because tomorrow I'll be answering a lot of questions inside there. Unfortunately, Catherine, I apologize for that. I will try to make something available for all you guys. Perhaps I can send you to the premium members a copy of my report. As a matter of fact, this were available on the Magic Scanner article. I'm not sure, Catherine, we did talk about the Magic Scanner article. Have you got a hold of a copy of that? When you attended the Magic Scanner training, I gave you a copy of the article written by Bill Wermine, and this is something, a follow-up from that. Now, Bill is back here, so we probably get him just to say a few words before we go on to our normal program here. All right, Bill?
Good morning, everybody. Okay. Good morning, everybody. I wish all you guys a good day and a good weekend and a prosperous ventures into the market. And I just want to report on a few things that have an impact on the market like right now. The first is I just recently received a report from the Inter-Pacific Brokerage, and it was quite eye-opening. And these are a few facts from it. The headline of the report is that the foreign funds are bullish on Malaysia. In fact, they bought 13.5 billion worth of Malaysian shares last year, and they continue to mop up Malaysian shares, 4.3 billion just in the last 2 months of the year. So we have an inflow of foreign fund money into Malaysia. The foreigners also bought 61.9 billion worth of government bonds last year. On the other side, mostly local investors, retailers, are wary of the imminent general election, and they have been selling aggressively. In fact, they have been selling net sellers for every month in the last 2 years. This is how bearish they are. And it just so happened I was at OSK also, and I saw the retail gallery there. There is absolutely nobody sitting in the retail gallery. There was 2 old men like my age, and they're reading the newspaper and drinking some coffee and enjoying the air-conditioned environment. No business is being transacted from the retail side. My futures broker over there at OSK, Mr. C.C. Hung, he has well over 100 clients for shares. He said nobody is doing anything in the share market. The only game in town right now, he said, is the CPO market on the short side. And he did say there's opportunity there. Commercials are net short. Small specs are buying. Retailers are buying. Commercials are short. Hedgers are short. They're locking in prices. It costs only about $1,100 to $1,500, depending on the efficiency of the company, to produce a ton of palm oil. However, they can lock in and sell it on the futures market for almost $2,400 per ton. So it's a very profitable business to short at this point. And he feels that there's a worldwide glut of oil seeds in the world. There's a massive harvest in Brazil of soybeans. So soybeans are coming down, soya oil is coming down, and by proxy, it looks like the CPO is headed down at least 500 to 600 points. So this could be a really great trade on the short side. Plus, the U.S. dollar is strengthening, so this is also bearish, the CPO. So that's what I have to report on that. However, some of the plantation companies are still profitable, and they have been selling, hedging, so it's still okay. And CC Hung is neutral on the CPO market. Now, getting back to the retailers as sellers. Well, retailers are weak hands. They have the least amount of information. They trade on emotion. They have no trading plan. They don't even want to invest on a 40 ringgit trading book. So they rely on rumors and tips. Whereas you take the foreign funds, these are some of the smartest people in the world. Goldman Sachs, Fidelity, Aberdeen Asset Management. These people have large research staffs, and they over the last few years, we've done some statistical research on this and found out that they are right more than they are wrong. So if you want to make money, you go where the money is, you go where the strong hands are, and follow them, and don't get scared what all these retailers are doing. So on that basis, stick with high-quality blue-chip shares that pay dividends, and you'll be fine. And don't get scared.
Thanks a lot, Bill. Now, there's a question in here, quite a good question, was from Wong. Is that how sure are you these are genuine buyers that is buying? Could it be GLC buying to their OC's account? That's a question of One No. Now, One No, may I ask you, are you a light member or premium member? Right? Are you a light member or premium member? One? Oh, you're a light member. Now, if you are a premium member, you will notice that we have an insider posting on our website. Let me just show you that some of these insider posting that we tell you that the foreign funds are actually buying all this. Let me just try to bring out one for you here and really show you what amazing things we actually do in our website to really tell you insider trading and smart money are buying. Okay, let me just get my screen up here. You can go to the category here, right, and you can see here insider report, insider chart here, about 286 of them, right. What I actually do is I look at the traces of the insider money and how they buy. So this is the smart money, you can see that, right. So if you look at it every day like I do, okay, let me just pull out one day on here on the 12th of March. This is an alert. When I see there's an alert, you can see Aberdeen Assets are buying Aeons, and so these are, as a matter of fact, maybe Bill can tell you something about the Aberdeen Asset presentation, Bill, right? When they came over and they were really bullish about this market, and also synonymous what we are seeing that the retailer are not participating, right, Bill? Just care to say a few words?
Okay, Aberdeen Asset Management is one of the most successful unit trusts in the world, and they particularly focus on Asia. They're one of the top performing asset management value investors in the world. And their focus is on solid blue chip companies, one with super solid balance sheets, ones that have great sales and earnings, rising dividends, and this is their focus. And just last week they did a presentation at my office, and they're launching the Aberdeen Islamic Malaysia Equity Fund, which has Sharia compliant shares. And I was very interested in their portfolio and what actually they're doing. So I noticed they were overweighting oil, gas, and energy, palm oil, financial services, wholesale and retail, and surprisingly healthcare. So, and within that portfolio, it's all super solid blue chip companies, and these are strong hands. And this is foreign money coming into Malaysia. So this is one of the foreign buyers into Malaysia, and these people don't do things rashly. They have a method of investing. First, they always visit the company first to see, just to get a feel for their management. They have their accountants go over their financial statements, their balance sheets, to make sure that the credit quality is sound. And these people, they have a very scientific, very disciplined method of investing, and that's why they're successful. And in fact, Martin and I, we model their methods, and we pick up the same sorts of shares that they pick up. So we're piggybacking on the super strong hands in the market. We're leveraging on their research, on their focus, and on their strategy. And over the years, I've always been a fan of Aberdeen, and I went to one of their presentations about 15 years ago, and I was very impressed. And since being in Malaysia, I've always followed the guidelines of Aberdeen. So when they are buying, you should be buying.
All right, thanks a lot. Now, one of the things that I've talked about here is I encourage you to sign up for our premium membership. If you've been following for us, you do know that our numbers are really growing, and we want to keep this special group to be able to access it. And the reason why is I always believe that good information, right, should be accessible to all. Okay. I hope I clarified that. Okay. Which Aberdeen is Bill referring to? There is few listed here. Aberdeen Asset Management. Okay, Aberdeen Asset Management. Aberdeen International Fund Manager. They are the same group. Okay. There was another question in here. Why is this? Oh, Bill just explained. Foreign funds are very bullish on the emerging markets, whereas traditionally markets which is like Australia and China, the old BRICS. Now, if you look back at my old article that I written here, which is well sounded, let me just get back to here, right? Why are we bullish in here? Now you could see on this rich and old. Read what I have to say in here if you don't about the GDP growth. That we are doing almost 5% every year, and these are BRICS, the new ASEAN, Malaysia, Indonesia, Singapore, and Thailand, which is growing. Look at the population. So the other countries, which is traditionally like Australia, the Western country, which is a bit more socially, they are really struggling to really grow for what we say. So the growth is over here, and we've been talking about this, catching the what we call the Clipper strategy. Remember any of those of you with Clipper strategy? We talk about it. So don't wait now. I mean, I know a lot of you are still skeptic about this, especially not only yourself, even some of my relatives have gone overseas to US, and they say they're putting the money back in this country again. What will happen? So meanwhile, more people skeptic, the people who really know this. I mean, you look at our performance here. We've been doing this since 2003. Let me just blow it up again. Right. You could see, we've been doing very well with our own performance. I mean, I just don't want to brag this, but the record speaks by itself. We've been, we outbid the KLCI by, almost, there's about 60% in here. This is, typically for the big account and small account, we're averaging about 13.8%. So that is why I'm continuing to be very bullish in this market here, right? Repeat of 93 Super Bull run. It's a different condition, the 93 and now. Okay, you may know, and you have been talking about it. The 93 was a time when the country was really moving from so-called backwater to industrial. The 93 again. Whether we'll see the kind of extremity, I don't know yet. Right, but I do see the market will continue to boom because we are seeing a lot of printing money that's coming into the country. But having said that, we will do due diligence and following the steps like what you talk about. We adopt good investment process. One of the key things is the feedback that we got from people on our website. Really, less than half of the people in our website actually make money from investing in the stock market. My question is why is that? It's really go on the bit deeper. A lot of the investor and trader actually buy shares which is already PN17 or bankrupt, or they buy shares which is because it's cheap, it's less than 50 cents and gone down the drain and lost money. So these are really hard-earned money that you'll have. And if you follow the way how we invest for our client, and those of you who eventually some of our listener here are also our client, eventually turn in and have their money in managed professionally. If you want your money to be managed professionally, get the right people to do it. I know doing it yourself may save a bit of money out front, but it also gives you a lot of headache to able to cope with the market volatility. I think that's very important. Remember, professional people tend to spend more time to this. Okay. KLCC by staple REITs is better than normal REITs in Malaysia. The REITs, it's another ball game altogether. Now remember, REITs, you are just investing in only at the property cycle. You're not really investing on the overall domestic growth of the country. All right. So it's a different ball game. REITs can be part of your asset classes, but it should not be just one of it. Okay. Moving on. I just don't want to talk too much about that, but this is now next one. But anyway, I will talk more about the this growth that we are seeing in Malaysia. Now, what I need from you is also some lately, we've been getting a lot of hits, and we're getting a lot of visitors from all over Malaysia, Singapore, Thailand, Australia. Now, one of the things is that when they are using the iPhone and Androids, they are not able to access our website. So we are getting our network configurator to configure, especially the firewall. For a little bit of background, about a year ago, the website that we have, Traders Truth Review, was actually hacked. And since then, we put up a very strict firewall. But somehow, this strict firewall has prevented many of those people who are using the iPhones, Androids, which is running on Maxis, U-Mobile, as well as Digi, not able to access that. So I need a bit of favor from you all. I would are foreign funds buying Singapore stocks too? Yes, they are. They are buying foreign stocks. They are buying a lot of the emerging markets. Now remember, emerging markets we are talking in here. Okay. So remember, please access the Treasury from your iPhones and Android. If you cannot, please inform me. We want to get this fixed right, because at the end of the day, our services to you as our members, like members, is very important, because eventually some of you will be our long-term client, and we hope to make money from you. So we really pride in our services delivered to you. Okay, we try to do much as we can. Is that all right so far? Okay. Is that okay so far? I just want to hear some feedback. Just all right, good. Now the next thing that we have in here is the last week that we talked about is the magic value ratings. For those of you who have not tried the magic scanner, please do so. So the magic value rating, it's a little bit taking from what we have from a magic scanner to really rate it. How many of you heard of this book called Stock Performance Guide by DynaQuest? Okay, Stock Performance books by DynaQuest. Yes, I think some of you have, some of you may not. Okay, what we are trying to do is actually take it to the next level to able to integrate it. Yes, you may not have heard it before. It's a very good book. But what we're trying to do in here to really look at the ratings. Okay, let me show you the dividend focus here. Right, there you go. So what we did is to really look at. Let me just get this out and expand this to really look at the weightage of a company, to really rank all these companies that we have based on sales growth, earnings growth, free cash flow growth, dividend growth, profit margin, to eventually to use some of the DNA. Remember we talk about, because this will lead to the DNA, a bit of sort of like a preview to my DNA, to really look at what are the companies that does well, that makes above average returns, right? Of course, we want to be investing just like the big smart money, the hedge fund, like Aberdeen Asset. They want to be looking at companies that are able to have consistent sales growth, earnings per share growth, increasing profit margins, and are able to pay higher dividend year in, year out. Now, let me ask you a question. Would you invest in a company that reduces its dividend payment? Yes or no? Or buy into a company that are able to increase the dividend payment? All right. No question. No answer. Okay. Yes. Increasing dividend. Thanks a lot, Henry. Thank you for your support. So what we're trying to do here is actually to come up with a list here, right? Buy good dividend counter. That's correct. That's right. So what we did, but this is will be incorporated in the magic value scanner in not too distant. What we did, but we took the rate, the growth of each of these companies and able to rank them up. Okay, like what we see in here. This is a raw data, so we are putting this up on the magic scanner. So what you're seeing, that the one that is highest ranked in here, surprisingly, is Pestariang, rated about 8.5. Then we have FEMA Group, Hartalega, and these are all based on